Article 51. Transfer of goods in designated zones. Designated zones are specific areas within the state that are considered outside the state for VAT purposes under certain conditions. These zones are typically free zones with special VAT treatment. Goods and services within designated zones can benefit from VAT exemptions under specific rules. 1. Movement of goods between designated zones. When goods are transferred directly from one designated zone to another designated zone, no VAT is due on that transfer. This reflects the principle that these zones are outside the state for VAT purposes, provided conditions are met. This VAT suspension treatment facilitates trade and logistics between designated zones, ensuring smooth business operations without unnecessary tax burdens. 2. Role of the executive regulation. The executive regulation plays a critical role in defining the exact procedures, conditions, and controls that must be followed when transferring goods between designated zones. This includes specifying the documents required to prove the transfer and the tracking and record-keeping systems that should be maintained. How customs and VAT authorities will monitor such transfers to ensure that goods truly remain within designated zones. Compliance with these conditions is mandatory to preserve the VAT exemption on the transfer. 3. Conditions for tax-free transfers. To ensure that no VAT becomes due when goods are moved from one designated zone to another, businesses must follow strict rules, including: goods must move directly between the designated zones. Goods must remain under customs supervision throughout the transfer. Accurate and complete documentation must be maintained, including invoices, shipping documents, customs declarations, and proof of receipt in the destination designated zone. Both sending and receiving businesses must be registered entities within their respective designated zones. 4. Procedures for goods in designated zones. The executive regulation defines how businesses must manage goods within a designated zone, including the procedures for receiving and recording goods and ensuring they are stored separately from domestic market goods. How they may be processed, example, manufactured, assembled, or repackaged, while retaining their VAT-exempt status. The conditions for moving goods into or out of designated zones. Rules around goods that are temporarily moved for repair or processing. 5. Key safeguards to avoid tax liability. To avoid triggering VAT, businesses must ensure: goods are only used, processed, or stored within designated zones. Any movement outside the designated zone into the domestic market, the mainland, is treated as a taxable supply, and VAT is payable. Full audit trails are maintained to demonstrate that goods remained within the designated zone system. If goods leave the designated zone system for domestic sale, VAT must be calculated and declared. For more details, contact us.